listening to Agriculture Today. For what's going on in the grain market sector, we turn now, as always, to grain market economist Dan O'Brien, K-State Research and Extension. Well, Dan, let's look first of all at the market's reaction to weather, and particularly here in Kansas, where one rain event took quite a bit of the steam out of the wheat market.
The moves we've seen in wheat and also in corn and soybeans over the last several weeks have been what's the right word to use? Noteworthy, paralyzing. We're searching for adjectives when trying to describe what's been going on. Starting out in the wheat market, we had seen a rally in the May contract up to about 545, 550. That occurring in the last 2 or 3 weeks. Since then, have been struggling around, wondering if the dry conditions that were the main prompter of those were going to perpetuate or just what. And as you say, we've received some moisture of varying amounts around the hard red winter wheat growing regions. And with that, we've seen, again, from those highs of a week or so ago of 540, 550, closing yesterday at 471. So, again, a full 70, 80 cents lower. We had seen that May contract at its lows back first part of December down at 420, 425, something like that. So really, I think the question is, are there any other opportunities for prices to go higher? What are we looking at going forward? Or is this just a bout of volatility based on one rain event? I guess I would be inclined to be in the latter camp. Again, we've had some rain, but we have a crop that again still has a lot of uncertainty about it. You can ask the question fairly: have we really replenished the soil moisture profile? And
the answer is generally no.
Generally no. So we really don't know what we really have out there yet. I know that's a bold statement, but we'll have the rest of March through April into the Kansas Wheat Tour coming up thereafter to try to assess what we really have. Will we have consistent rains coming through those time frames, or at least enough moisture to help nurse this crop along and bring it to fruition? I think what probably causes a cathartic reaction on the part of the market is that in the last 2 or 3 times when we thought we had major problems, we had that moisture come, secondary growth came on, and everything turned out great. So we wondered in hindsight, why did we worry about it? Well, we're almost at that mode again, where we've got some dry conditions. We know they're pretty confident that the crop has had some issues, some damage. We don't know. We're not that greatly confident about subsoil moisture. So I don't want to state that, we're going to go right back up to 540, 550 for May futures and without any hiccup, but rather in terms of the fundamental underlying in-the-field factors that we look at, I don't know that they have been solved even with the moisture that we've had.
One would have to note conversely, though, that in the corn and soybean sectors, the markets have reacted to what is shaping up to be certainly not a drought, in fact, maybe excessive moisture in some areas of the Corn Belt.
Yes, of course, we're watching both the moisture in the eastern Corn Belt, and as you say, some areas of excessive moisture, and also are watching what's happening down, as you and I have been talking about for a number of weeks now, and all the market's been talking about, i.e. the problems that have been occurring down in Argentina and southern parts, anyway, of Brazil. So had gotten up on the May corn contract up to about 395, closed yesterday at about 376, had been down to about 372, 373. It almost seems like 20 cents up and down in volatility without major questions being answered there either. So right now, as we in Kansas look at our own fields and look to the east, I don't know that we're anticipating major dry conditions. I would say that the weather maps aren't just looking sterling in parts of Missouri, parts of southern Iowa, et cetera, also up into the Dakotas again, all of Kansas having our problems, parts of Nebraska. But if there's one thing that we observe in the grain markets, it's that what we think we have in hand, what we're making judgments off of for supply-demand prospects that determine these price levels, what we think we have in hand right now, about the third week in March, can change pretty dramatically and have a lot of factors coming at it by the time we work our way to the primary planting season of late April, early May, and then on into early crop development. So if anything, I think we should anticipate all that much more volatility. and really the same situation that we just talked about for corn. It's just a matter of changing the scale and where we look at the price charts for May soybean futures. Again, had gotten up to about 10.85 within the last couple of weeks, dropped to about 10.20, closed at 10.29 on yesterday's market. So again, had ran up, come back down, and then bounced off those bottoms a little bit to the higher side. And again, South America influence in large degree, and just so telling that corn and soybean futures are almost mirror images of each other in terms of their movements to the high side, movements to the low side in proportion, and it just seems like they're tending to run together right now.
Now, the row crop markets will take their next major cue from the USDA's prospective plantings report. That's out this coming Thursday, and that's being hailed, at least in some of the write-ups, as potentially a market mover given everything that's going on.
Yes, the USDA, of course, in their baseline projection and what they put out in their Outlook conference in late February, basically said 90 million acres planted for both, for corn and for soybeans, and kind of buried within those numbers were grain sorghum acres being up about 700,000 acres here in the U.S., and then actually some higher hard red spring wheat acres than many had anticipated coming into that session. So now you've got other analysts coming in, Informa, Allendale, Farm Futures, et cetera, different groups coming in giving their projections. And the numbers tend to be coming out with soybean acreage projected from both farmers and from analysts to be up a little bit from the USDA's numbers, again, up 1 or 2 million acres, and corn to be down about 1 or 2 million. I don't doubt that these acreage numbers do certainly affect what we expect to see on the backside of 2018 in terms of final production numbers. But again, if we're talking 1 or 2 million acres, gosh, give us 1 or 2 or 3 bushels per acre on the U.S. average yield in either direction, and then we really start to move things. So the acreage numbers, again, unless we really get surprised and drop 5 million acres or gain 5 million acres on either corn or soybeans or of those two crops, they'll be important. But the biggest issues will be dependent on the crop growing season and yields per acre expectations coming out in June, July, and August.
Now, the one thing of the most recent vintage that's been causing a stir in the markets last couple of days, it's become clear that as this trade friction between the U.S. and China escalates, that agricultural products, and specifically in our case today, soybeans and grain sorghum, may be in the crosshairs for Chinese retaliation.
Yes, and Chinese officials are being upfront and being quoted in ag-oriented press as saying that's exactly what they're planning on doing. And, of course, they've already done that on grain sorghum. Right. Here in Kansas, we've seen the basis impact, and it hasn't rectified itself in terms of at our key eastern Kansas locations being 50, 60 cents above futures, and then in one fell swoop down to basically 60 cents under, so a $1 swing. It really has affected the expectations for profit for the crops-affected grain sorghum in particular. But they also have identified soybeans and then live hogs as well, or pork exports. So these things are at risk, and when I stand back and ask the question, how far can China push this? Given that we have a smaller than expected crop in Argentina, and yes, we have a good crop in Brazil, Paraguay has some exports, etc. But again, there just are not that many places around the world that China can go to fulfill their domestic demand for soybeans and soybean products. And again, when you crunch the numbers, the trend of Chinese soybean usage it's not quite a 45-degree line, but basically we were sitting back in 2012-13 marketing year at total usage of soybeans at about 76 million metric tons, and we're anticipated, in 2017-18 to be 111. And their domestic production is level at about 20. So they've got to make up the difference with imports. If Argentina's weak, Brazil, yes, having a good crop, but again, in balance, a little lower for South America. China still has to deal with the U.S. to get soybeans. And I don't know how bold they would be to actually cut off or dramatically cut short U.S. soybean imports into their country and overtly and deliberately raise their domestic food prices. You've got part food and part processing to bring in meal to feed the livestock. So either directly or indirectly, they're affecting the food costs. So for both the U.S. and China, as they consider wrestling over these trade issues, it's a high-stakes game. And unfortunately, our ag products, some of our key ones, are getting caught up in it.
Well, no lack of turmoil for our growers out there to keep track of and weigh for themselves as they consider their marketing intentions. And Dan, as always, thanks for your time and your comments.
Thanks, Eric. Take care.
That's K-State Research and Extension grain market economist Dan O'Brien, our regular Friday guest here on Agriculture Today.
While many people know hunger is an issue in developing countries, it is also a problem in our own backyards. In 2010, 1 in 7 Kansans struggled to put adequate food on the table. 2 K-State Research and Extension programs are tackling this problem. The Family Nutrition Program and Expanded Food and Nutrition Education Program reach thousands of Kansans in more than 70 counties. They learn how to eat healthy with a low budget. For more information about these programs, visit ksre.ksu.edu.
Agriculture Today returns now, and we're long overdue for an update from the agency here on the K-State campus known as Kansas Agricultural Mediation Services, which has had a brisk 2018 of it so far. We'll hear from our guest. Staff attorney with the program, Forrest Buhler, is across the way once more. And Forrest, our purpose here is to remind folks out there about the services of this office in the case where financial situations have become tight for them. And that's clearly a driving factor in your workload right now.
That's correct, Eric. Over the last couple of years, our caseload has just been steadily increasing. Last year, for example, we were had a 60% increase over the year before, and this year we're probably going to have another increase. A lot of what we're seeing is typically loans have been restructured within the last year or two, and now they're delinquent again. They've been having difficulty making those payments. The equity that they used to restructure those loans in the past is now pretty much gone. And so they're facing some difficult decisions. There's not much room left there to do some more restructuring. And even if there was equity left, sometimes if you take all of the carryover debts that we're seeing and putting them against land or something and amortizing them over a longer period of time, even those payments on those restructured loans are very difficult to make. And so it's really eye-opening to see how the ag economy is shaking out. Some of these producers are looking at liquidation of some assets to get that debt down, and lenders are starting to see the necessity for that as well. And I don't want to do anything against lenders here because they're experiencing the same things that the producers are in that respect. They're trying to keep their neighbors and friends in business, and it's very difficult for them to make some of these decisions and face the borrowers in that respect. Producers have also gone to a great extent away from their lenders to get some operating debt for seed and fertilizer, implement dealers, things like this that they've had to do in order to try and get money to operate with. And so there are a lot of different creditors that we're running into that we haven't in the past. And so they still have that carryover debt, even though they've had to go to other lenders. One thing that always is an indicator to me, we've had a lot of farm credit system institution borrowers that have become delinquent as well. Those are just some of the things that we're seeing that have shown just how difficult it is out there.
You also, with the Agricultural Mediation Services, work with producers as they work through their Farm Service Agency loan situations, and you do track those numbers closely, and those are well defined by USDA.
Yes, they are. Toward the end of January, 1st of February, They have statistics in what's called a 541 delinquency report that shows the number of delinquencies of FSA borrowers across the state that have direct loans with the agency. Most of the loans that are reported through FSA come due toward the end of the year, so December 31st, for example, of 2017. This year, about that time, at the end of January, the number of FSA direct loan borrowers that were delinquent were about 346 out of about 3,700 borrowers across the state, which is about a total of 9.2% that were delinquent at that point in time. That is an increase over years past. In 2014, for example, the delinquencies were 154, which was about 5.5%. So you can see almost a doubling of the delinquencies, but still not as high as we've seen in some years in the past, but nonetheless a large increase.
The USDA has a process for working through those delinquencies, and that's something actually that CAMs can become involved with.
That's correct, Eric. After borrowers with FSA direct loans have been delinquent for about 90 days, the Farm Service Agency will send out a notice of availability of loan servicing options. They will be given a number of forms to fill out to basically show FSA what their current situation is, and we'll give them some numbers that FSA can look at to see if they can restructure loans through the rules that are available. Things such as reamortization or deferral of payments, or in some cases, if the value of the collateral is less than what's owed to FSA, sometimes FSA can write down that debt as well. So there are some good options that are available to producers if they do have direct loans. When these notices come out, and they should be coming out here around the 1st of April and thereafter, the borrowers will have 60 days to respond to that notice of availability of loan servicing. And so there's lots of paperwork there to fill out to get a good idea of what your operation can do and be very detailed about it. We can help with that in a lot of ways that we'll discuss, and so they can get some good help from farm analysts that can look at their finances, to legal assistance, to various different things that we can help them with as they prepare that paperwork. FSA then will take all that information and determine if they can restructure the loan. If they can, that's great. If they can't, then the producer can file an appeal or request mediation through our program. And that's when we can help and sit down with FSA and some of the other creditors that may be involved in order to see if we can get a workable, feasible plan that could restructure that FSA debt.
So far we've been talking about direct loans from FSA. Can the same apply to loans guaranteed commercially by FSA?
That's correct. Similar things such as reamortization, deferral, and even write-down are available for guaranteed loans as well. And so, again, that's something we can help them with.
Just a second ago, Forrest, you outlined the basic services that Kansas Agricultural Mediation offers to producers with FSA loans. The Farm Analyst Program is a starting point.
It's a vital tool for us in terms of helping folks prepare for the mediations that we do. The Farm Analyst Program is based here at Kansas State University, and they have analysts that have expertise at running the FinPac computer program. They actually travel out to your farm and work with you there where your records are to input basic numbers into the computer program. It looks at the feasibility of different options that you may be considering to try and restructure your debt.
And CAMs can help make the arrangements to the Farm Analyst Services. So that's one easy way to make the connections there. There's also another service provided actually through Kansas Legal Services that your office can help facilitate, and talk about that.
In preparing for mediation, besides knowing the numbers, it's also a good idea to have an idea of what your rights and responsibilities are, especially under loan situations. And so we have attorneys that are experienced in agricultural law and agricultural credit situations that can advise you as you go through the process. These attorneys are spread out across the state over about 8 offices that serve regional areas. There's a very reasonable fee. A lot of our grant picks up most of the cost of that. They do give you good advice, especially not only your rights, but also your obligations, because sometimes it's important to understand that you need to follow through on obligations with lenders as well in order to make things work.
And then, Forrest, there's outright mediation. And obviously, your office can serve as a source for that particular skill.
We can send a mediator out to where the lender and the borrower are and work with them there to use an independent third party to help facilitate a discussion about options that could be used. The mediators don't tell or judge or require anyone to do anything. It's solely there to help facilitate the discussion, to clarify issues, and to make sure everybody's on the same page. It's been a very successful tool over the years that has resulted in an agreement rate of about 80 to 85% in the cases that we deal with. And there's no cost for the mediation service as well.
We've been talking largely about Farm Service Agency loans here and what CAMS can bring to the table in addressing those situations. But really, all of the services you've spoken of can be applied to all agricultural credit situations, you say.
Private banks, farm credit system services, input suppliers, ag implement dealers, anyone can request mediation. It doesn't have to be a borrower. And all of our services are available, even legal assistance to lenders or input suppliers or others who would like to have some idea of what their rights are going into a mediation.
And in the end, all of this is initiated through a toll-free phone call.
1-800-321-3276. And if you like letters, the last 4 are FARM, F-A-R-M. So just give us a call. It's toll-free, and we'll be glad to help you.
We wish you the best in addressing all of these questions and matters that come to your doorstep at CAMS. Forrest, thank you for the update right here.
Thank you for having me, Eric.
He's the staff attorney with Kansas Agricultural Mediation Services. That's a function of K-State Research and Extension, and it's based here on the Kansas State University campus. Forrest Buhler. If any of these services that he has illustrated today would be of benefit to you as an agricultural producer with farm credit issues, give them a call, 800-321-3276, or if it's easier to remember, 1-800-321-FARM. And you're listening to Agriculture Today. More shortly after this break over the K-State Radio Network.
Have you ever thought about where your food comes from? If you're thinking the grocery store, think again. Facts show that the American farmer feeds more than 129 people.
They are continually increasing and improving their operations. A wide variety of crops and livestock are grown in Kansas as well as the United States, providing food to your dinner plate.
Next time you see a farmer or rancher, thank them. For more information, contact K-State Research and Extension.
Now for you on Agriculture Today, our review of Kansas agricultural weather with Mary Knapp, climatologist with K-State Research and Extension, stopping over from the Weather Data Library here at the university. And as advertised in our visit last week, Mary, moisture for the early part of this week. Welcome, but hardly a drought buster, we need to stress.
Yes, we did fare nicely for the week, and the state, for the first time in a very long time, actually came above average for the weekly precipitation. That was a statewide average of 0.74 of an inch, which is about 1/4 of an inch surplus for the week. And given the extreme deficits, it probably won't surprise anybody that we're still less than half of normal for the year to date. And we won't even go into the deficits that we built up at the end of last year, but still, it's a step in the right direction, and we'll take it. We should note that The Southwest still continues to be left out of the majority of the precipitation. You get down into the Elkhart region, and they didn't get anything. But the division as a whole averaged 28 hundredths of an inch, which is the first time they've had substantial rainfall, again, in a very, very long time. That makes it about 82% of normal for the week ending on Tuesday.
And what part of the state was the most benefited by the rainfall?
Well, the South Central was the area that really won the prize, if you want to call it that. They averaged 1.24 inches, and that was almost 2 times their normal weekly precip. So, again, very, very welcome in that area. It's one of the most severely affected as far as the drought. We did not get enough to push that exceptional drought off the border, mainly because, again, the band of moisture was more on the northern side of the South Central Division, if you want to call it that. There was a band across the central part of the state, and that carried over to east central Kansas as well. Narrowed a little bit in the east central region, but again, didn't make it quite down to the border. As you went through the northern parts of the state, not nearly so much. The Northwest averaged 32 hundredths of an inch, which was just a shade above the weekly average. North Central averaged 73 hundredths of an inch, and that was about 1.5 times their normal. And then the Northeast was 58 hundredths of an inch, and that was 112% of their normal. So again, not quite as good as the South Central and the Southeast, but hey, a lot better than the Southwest.
And again, as favorable as that all sounds, all of this barely made a ripple in the overall drought monitor.
Right. In fact, we saw no changes at all in the drought monitor. It was enough to keep things from worsening beyond what they already are, but certainly not enough to make any improvements. And you can see that in a number of factors. One, you can look at the soil moisture anomaly, and that shows a slight improvement, but still a significant deficit in that. You can also look at the fire risks. So, in fact, the Predictive Services out of Colorado issued a special alert for the central and southern plains of high fire danger, specifically the fuels, and they are dry enough that you can see extremely active fire behavior, even if you don't have the typical red flag conditions. So you don't necessarily need the extremely low humidity and high winds to have a fire behave as if you had those conditions. So they're cautioning all those that are involved in the fire community to be alert to that. Normal breaks that you might expect to stop a fire, such as roadway or a creek, are likely not to be as effective. You might see more active behavior on the flanks of the fire than you typically expect. So if you're out there and are considering that on days when we don't have those red flag warnings and you would typically burn, be alert to the fact that that may mean a little bit more preparation is needed, and you have to be a lot more cautious about controlling that fire.
Vigilance and good decisions, they're still essential, so please do keep that in mind when we think about the wildfire potential remaining in Kansas. So what's ahead? There is rainfall potentially later today into tomorrow.
Well, there is another ripple coming through. We're getting a little bit of the benefit from that atmospheric river that has come ashore in Southern California, making all the news for the danger of flooding and mudslides in California, but that brings more moisture into our region. So that is on the horizon, and what they are calling for is the quantitative precip forecast has a fairly good amount of moisture coming across the state. In the eastern part, particularly the southeast, maybe as much as 2 inches of rainfall out of it. The rest of the state will see, of course, diminishing amounts, but still, it's also interesting to note that even the southwest may see as much as 1/2 inch of moisture, which is more than they've seen in a long time. Again, we'll take it. We really need that, but we need this to continue on a weekly basis for the next 5 or 6 weeks to have a good chance of erasing the drought conditions that we're currently seeing. Again, we didn't get into this situation in a week, and we certainly aren't getting out of it in a week either.
And those amounts that you just cited cover the upcoming week by and large.
Right. It basically covers through the 31st of March. So we're going with that. And note that last week they issued the April outlook, and the April outlook is neutral, equally likely to be above normal or below normal. While that's not particularly exciting, the good news is the thumb is not on the scale towards the dry side, and we certainly will hope that this signals a change in the pattern and that we get into a more normal distribution of our rainfall.
And a more regular distribution of rainfall. Likewise.
That certainly, it doesn't do much good to have all of that come in 1 week or in one day. We really need it to be spread out so that we can actually get the benefit of it rather than having a flood in the midst of our drought.
Let's hope we've turned the corner. And Mary, we always appreciate your input. Thanks, and enjoy your weekend.
Thanks, Eric.
She's along with us each Friday from the Weather Data Library here at K-State, research and extension climatologist at the university, Mary Knapp. And as we do here routinely, we'd encourage you to take advantage of the information on the library's website on all sorts of weather factors of interest to you producers. mesonet.ksu.edu. That's mesonet.ksu.edu. A good weekend to you as well. Please rejoin us on Monday. Until then, Eric Atkinson for Agriculture Today. This is the K-State Radio Network.